inheritance tax, or IHT, as some people call it. I personally think this is a voluntary tax, and the only people that ever pay it, or families that pay it, are those that don't pay any attention to taxation. It's always hard to think about tax when somebody's passed away, or if you've got an elderly family member. The last thing you want to start talking about is how you get their assets off them, or their house, without paying any tax. Let's look at the implications of taxation. So let's look at a typical scenario here where you've got mum and dad with assets they own collectively. Mum and dad may have separate assets, but they all get added together at the end. Let's say they've got a house here and they've got, you know, a bank account over here, and then they may have some other assets over here as well. Sadly, in my example, we won't be sexist, but let's say sadly the father's passed away. He then has the ability to pass his inheritance tax threshold, or his nil rate band of £325,000 onto either his spouse, his wife who's still living, or onto other family members if she isn't, or if he wants to do something different with his estate. Again, very basic planning for now. We can get into trusts and other planning at a later date. But let's suggest for now that that money's passed on to his wife. Sadly, his wife then passes away, or the mum passes away. She gets the ability to move these allowances on, because the interspousal transfer is not deemed taxable. So you can pass anything between husband and wife during your lifetime without any tax implication. Now she has the ability to pass on an estate of £650,000 once mother and father have passed away. Now, £650,000 sounds an awful lot, but obviously if you live anywhere in the UK, house prices are flying through the roof. Not much interest is being paid on bank accounts. It's probably principally the assets you have. But if you had an asset value collectively here, or the family had an asset value of £1 million, that wouldn't be unheard of, certainly down in the southeast, that's for certain. What that means, if you've done no planning whatsoever, you haven't passed anything on to the family during your lifetime, there will be a tax implication on the sale or the movement of all these assets through the estate. And let's look at what that could be. Okay, £650,000 is tax-free. Brilliant, albeit this is all from pre-taxed income. I find that a little bit distasteful. However, let's again say it's tax-free. You would then have £350,000 of your family estate that's taxable, and the tax on this is an eye-watering 40%. So all of a sudden, you will have to pay £140,000 to release your family money that your parents have worked hard on, or your grandparents, to collectively get to that £1 million. Now, there's a number of ways to avoid that completely legally. I'm not suggesting any tax avoidance, any offshore planning, but what you can do during the lifetime of mum and dad, or grand and granddad, they can gift money away to their family. You can do this in a number of ways. Very small gifts, £250 at a time, just by giving money to people if you want. You could gift any amount of money through income. So if the parents have an income of, let's say, £50,000 a year, they can gift all of that income during their lifetime without any tax implication. You can give gifts for weddings or childbirth. There's a number of other different things you can do. But the other thing you can consider is something called taper relief, which is gifting during your lifetime. And what happens over the course of a 7-year period, the asset value up here, let's say this is your assets up here, starts at £1 million, but you gift it on day one to somebody or the entire family. And then over a 7-year period, the tax implication of passing that asset or the assets to the family gradually diminishes down to zero. This is why I'm convinced this is a voluntary tax, because you can gift at any point during the 7 years before somebody passes away and gift all of the assets across without any tax implications at all. That is really the inheritance tax and the crux of it. There are trusts, there are other ways to mitigate tax liabilities. That's something that's a lot more complicated for another subject.